we are getting even more bullish on Chinese equities after turning very constructive on the market at the beginning of December last year. We are expecting MSCI China index to reach 80 by the end of this year and the Hang Seng index to go up to 24,500 before the end of this year. So both indices would imply around 15% upside further from where the market is trading right now. And this actually implies that the Chinese equity market will actually top the global equity market performance for 2023. So this is the time to get back into China.
Well, what's interesting was how do you play China? Do you get into the H-shares market or do you go on the mainland with A-shares?
That's a very good question. The number one trade we recommend to investors at the moment is to buy these large cap, highly liquid internet names. We haven't been recommending getting into internet for quite a long time. Probably you still remember between January 2021 and all the way to around December 2022 for as long as 23 months, we actually have been quite cautious on Chinese equities and particularly with some skepticism around the internet sector. But now we believe it's a time to get back in there. Number one is that the internet sector actually has very high correlation with the general momentum of consumption pickup in China, and we know that's about to happen post the COVID recovery. And number two is that we realize the global institutional investors are still quite significantly underweight on these large cap liquid names. And as global investor sentiment about China continues to recover, they need to close or at least narrow these underweight positions. And the most straightforward trade is to get back into the internet names. So we do expect a lot of fund flow and asset reallocation back into the sector.